Welcome back to Galaxy Grid, where we cover all the interesting stuff happening in crypto markets. I'm joined by Will Owens, Lucas Chayan, and Zach Bacorny from Galaxy Research. How are you guys doing today?
GM.
Good morning. Doing great.
Markets are, well, I don't know. People are calling me a dirty bear because of the note I put out last week, but we're going to get into markets, their squishiness, a little bit of rebound after the government, some news from the Senate that the government might actually reopen this week. We're also going to talk about Balancer, an exploit that I guess fully drained one version of Balancer, a DeFi application. You know, are DeFi exploits back on the menu, boys? We'll talk about that, and then we'll get into Monad. I'm not sure how to pronounce it. It is launching soon, and there's been some really interesting comparisons between its pre-market perps trading of its token and other such pre-market perps tradings of other pre-launch tokens. We'll also talk about Coinbase saying they're going to put Monad on their new ICO platform, and we'll talk about some other things, interesting narratives in the crypto markets right now. Before we get to all that, I need to remind you to please refer to the link to the disclaimer in the podcast notes, and note that none of the information in this show constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Gentlemen, I am being called a dirty bear around the entirety of crypto Twitter because I said that our year-end target for Bitcoin, meaning the next 6 weeks, is now 120 bullish target, not 185, which is what we said last year. Is that fair to call me a dirty bear?
You also said that there's no more 10x's or 100x's or 1000x's. So
in Bitcoin, is that? I think there could be a 10 bagger in this thing over a few years. 1 million BTC. But yes, so perhaps the days of that are. So wait, does that make me a dirty bear, Lucas?
No, I mean, I think it makes you a practical person, which in crypto usually means you're a dirty bear because it's either moves or but no, I mean, I think it's fair. I think what you laid out in the piece, if people haven't read, makes a lot of sense. We're seeing, consistent selling, but we're also seeing absorption of that selling. And so while that may cap some upside in the near term, it also, is not so bad as long as you have continual flows coming in and absorption and a floor. So it's just a period where Bitcoin is finding, what is a good value for it at this price given market circumstances. And I think we'll need either another set of catalysts or something like that before we see a, major continuation of the move higher. And until then, it'll just keep chopping people up.
Yeah, for sure. And I also think it's not all bearish. You had this take at the end, kind of like boring is bullish for Bitcoin, like this lower vol, policy sensitive Bitcoin. This is what's going to qualify it for reserve portfolios, balance sheets, So you have this trade-off of kind of like less upside torque, but that's kind of what big capital allocators are going to want and look for.
Yeah, generally, I think like it's a very interesting market period right now because we've had this huge sell off in Bitcoin and alts. We had October 10th, the deleveraging there. And then since then, we've actually seen kind of this crazy altcoin explosion across a few different verticals. We've seen, I think, privacy, stable coins, the ownership coins, ICM, Meta, I kind of put those together, agents and AI, neobanks, and then maybe kind of fits in with the privacy, this store value type narrative. And I think what's interesting here is one, if you're looking for an alt season, a lot of these coins are in alt season mode, right? These coins are going parabolic, but it's really quite a big shift from what we would have expected 6 months, a year, 2 years ago, where memes are notably absent from any of the leading performers. And I think that's a really positive sign for the market. I think it's something when you talk to most people a year ago, they would have never expected. And it's surprising as someone who watches meme markets quite a bit. Disappointing.
Yeah, for sure. Especially on the privacy stuff. It's honestly insane if you just look at the Zcash chart. I feel like everybody has been trying to short it like the whole way up, like liquidated at $200, liquidated at $300, liquidated at $400. And I mean, Monero, like XMR, had a little bit of a pump this weekend, but I feel like the market is kind of catching on that privacy tech is more important than maybe people thought. But yeah, I mean, it's honestly been insane. Like we had poly markets for Zcash, like will it hit $500 by the end of the year? Hit $500. Will it flip Monero market cap? Did that. And then we have a new one, like will it hit $1,000 for the end of the year? Right now it's like 40% around that, 40% odds for Zcash to hit $1,000 by the end of the year.
So Zcash hit what, 750 or so on Binance, and then retraced all the way to 500, 490, but now it's back in the 600s. Like, that looked like a bit of a blow off top there. Like, can we call this, by the way, outside of Zcash in particular, but like, is this really an alt season? Like, are the alts you're talking about, Lucas, have they actually, like, they're not in price discovery, are they?
No, but it's going to be a while before.
They're still well below all-time highs, right?
It's also just so concentrated. Like it's only maybe like a couple dozen tokens that everybody's kind of latching onto. There's like minimal breadth. It's just a few absolutely ripping.
Yeah, I guess I've redefined in my view, what alt season is.
You've lowered your bar for alt season.
I've lowered my bar, and I've also, I think there's just so many tokens you have to accept that they can't all move at the same time, and you need to be heavily focused on what the dominant narratives are, and that is where you'll see the alt seasons play out. What I do, if you wanted to call me a dirty bear in this situation, one thing that I'm trying to figure out here is like, how much of this is just kind of momentum and people searching for narratives, and how much of this is like real? Because on the surface, yes, privacy is great. Privacy is super important. But has there been fundamental shifts over the past month or two that suddenly makes Zcash like the best token in the world to own?
Yeah, I will say,
I feel like this is almost the first altcoin I've seen like Bitcoin maxis feel threatened by recently. People are kind of pitching it as like this encrypted Bitcoin. Gemini just added like Zeke withdrawals to their platform.
Yeah, shielded withdrawals, privately. Right? Shielded withdrawals.
Yeah, exactly. Yeah. But yeah, I mean, we'll see what happens. Obviously with these like insane run-ups, it's like super hard to know what's actually happening. But I don't know. We'll see. It's funny because we spoke about this on Galaxy Grid like a few weeks ago, and we were like, Zcash just pumped like crazy. It was like $100 or something, like 6x since then.
I don't think that nothing is. I think there are some changes coming that you outlined, Will, in your piece about Zcash last week or 2 weeks ago, maybe at this point. Fundamentally for Zcash's roadmap and such like that are on the horizon that are interesting, but I don't think that's what the market is betting on with this rise. And then Lucas, like when I hear you say like, has something changed? Like, if there were like mass confiscations of wealth occurring in the real world and stuff like that, you could see that as a positive catalyst for a privacy coin. But I don't, to the extent that that's been happening, I think it's not different than 3 months ago, 6 months ago, right? Like, so I do think this is narrative creep here, like in hunting for a narrative. And that's what makes me, I would say politely cautious on this run for Zcash. It's obviously well below its all-time highs still in dollar terms. And I mean, let's not put it in Bitcoin terms. That would be rude to do. But it's certainly way behind that as well. So I think, we just have to wait and see. I guess it's not that. I mean, I guess it peaked at 875 on Binance in 2018. So it's not well below. In fact, it is a pretty wacky looking USD chart, I would say. Pretty wacky looking.
Yeah, it's absurd.
I think if Zcash can get above 870 or 900, then it starts to be like, okay, maybe this is a sort of a genuinely new, fresh look at Zcash. But for now, it does seem like an intra-crypto cyclical rotation play that, anyway, it still seems to have legs. What about other metas? I mean, maybe Zach, get you involved here, man. Like the prediction markets are still a thing. I saw the gambling companies are still big mad about prediction markets doing sports event markets.
Yeah, I mean, sports have become a major use case for the prediction markets like Polymarket and Kalshi. I mean, which is kind of disappointing because I think like the original plan for this stuff was like bet on anything, like make them the like arbiters of truth on things that like you physically couldn't get information on elsewhere. So like personally, I mean, it makes sense why sports gambling would become huge on these things. People just like to gamble and you put it on chain. And I mean, I don't really sports gamble, but maybe it is like a more efficient system than going through like DraftKings or some other bookie. Maybe like having like the market set the lines for things is more efficient to these platforms. I'm not really sure. But yeah, and then I think just like the spillover into other places, like we're seeing like viral markets and opinion markets, I feel like, start to kind of creep into the prediction market narrative as well. A lot of people have been building these things over the last 8-12 months that are now finally starting to launch, or at least release like private alpha beta testing periods. So yeah, I think there's a lot going on there, and I think we're only going to see more of that happen over the next year. People building stuff on top of Polymarket and Polymarket assets, and novel types of prediction market style applications pop up.
I mean, I would be pissed if I was one of these gambling companies. Like if I'm scrolling like my YouTube or like Instagram feed, like the little Kalshi advertising is gambling is outlawed in your state, but you can still use Kalshi. Yeah, and so it's like regulatory arbitrage, and it's so like overt. It's just very different from what you're used to seeing, I feel like, in the crypto ecosystem.
Yeah, I mean, every single casino that has been forced to go through like the regulatory ring probably pay tens, if not hundreds of millions of dollars to get cleared to do this stuff. And we just put it on a blockchain, so we're free to go.
Well, they didn't just put it on the blockchain, right? They have a federal license for event contracts from the CFTC, and I guess now Kalshi is, but it is sort of that, the gambling companies definitely feel rugged. Their Kalshi is now embroiled in lawsuits against state gambling regulators in at least 4 federal courts: Nevada, New Jersey, Maryland, and Massachusetts. So those state gambling regulators are also kind of saying the same thing. We set up this whole thing. We gave the license to Caesars and to DraftKings or whomever. And who the hell are you guys coming in with this thing? And Kalshi is now preemptively suing gambling regulators in a bunch of states, saying for injunctions, basically to prevent them from being sued for this, saying that our federal license for event contracts supersedes your state gambling license. It is pretty interesting. I mean, obviously, this is not legal advice, but my understanding is that if Kalshi were to win out on those arguments through the federal courts, that would sort of obviate the state gambling licenses across all the states. Be very interesting to see if this goes to the Supreme Court at some point.
But yeah, I mean, even beyond all that stuff, I think people are starting to realize that Polymarket and other prediction markets actually give decent signal on events. Like we're seeing Google now integrated into like Google searches and all of that, which is something we actually spoke about, I think, a few weeks ago, where it was like, okay, like ICE took a decent chunk down of Polymarket. Like, what's the outcome here? And I think the conclusion we came to is people are caring about the output, not so much like the trading input pieces that go into creating the signal. All people really care about, I think, is the ultimate outcome percentage based stuff. So yeah, we also have a lot of that stuff going on as well.
Yeah, and on the sports betting stuff, like I was just in college last year. All my friends are sports betting on everything. Every single time there's a game, everybody has all these bets, right? And these past few months, I've gotten all these texts. Everybody's kind of like porting their money from sports books over to Kalshi, like switching to prediction markets. And it's kind of crazy to see that in real time. It's like people that are not engaging in like crypto blockchain tech are, just switching over from sports books to prediction markets. It's like, damn.
Well, surely, Will, you're counseling your friends to learn about the hard work and savings technology that is Bitcoin rather than gambling
100%, 100%. Take profits into Bitcoin.
Well, I just don't like gambling on things I have no control over. That's why, like, if we're gonna play cards where I can play against you, like that, I'm okay with. But just randomly gambling on whether Jared Goff's gonna have 3 touchdowns or 4, to me is a waste of your time. But to each their own. Let's move on. That was a little bit of a rabbit hole. It sounds like I may or may not be a dirty bear, but Lucas says I'm pragmatic, so
I'm safe. This is where and I think you're pragmatic because I do think like broader crypto market, we've had all these amazing developments and like integrations with TradFi and everything, but eventually you get to a point where all those integrations have been announced and the hype starts to outpace the on the ground facts and realities. And so while that's very bullish long term, short term, what it means is you need to give the market some time, and you need to give these teams some time to actually like integrate and scale these products to where they get to the point where everyone says they're going. And that can take months, that can take years. I think like one thing after being in crypto for a long time is like everything takes a lot longer than you think it's going to take, but that's not a bad thing. That normally just means that like they're like if everyone's getting bearish, that's why if everyone's getting bearish, you should probably start getting bullish, because they're just getting bearish because they're impatient.
Yeah, and there's a lot of narrative-driven cyclicality in crypto. All right, let's move on to the next story. Balancer V2 and its forks were exploited for more than 125 million. Zach, what is this? I mean, it's nowhere close to like the Ronin Bridge or some of the biggest exploits that we've seen, or Bybit of a centralized exchange, but really significant nonetheless. Why is that?
Yeah, I mean, Balancer's been around for so long. It's been forked so many times. Like Barachain uses it as its main DEX, or like the Barachain DEX. So like a ton of money has flown through this infrastructure, like directly through Balancer and then through all of its forks, which I think is like the most noteworthy thing. Is like this bug has always existed. It's not like it just popped up yesterday. Like this thing has been around since 2021 and somebody just found it. Like I think that's like a little unsettling. And I think what's kind of unique about this one, like we sat on the desk and we're talking about it. Like, when was the last time we saw an exploit that kind of had these qualities? And the only thing that we were really able to think of was Compound and Curve. But yeah, I mean, what they did, I don't think was like overly novel. It was just Balancer essentially works by pooling all of the LP deposits into a single contract, and then having an ancillary contract that essentially just determines the price based off people trading in and out of the vault. And they just essentially spammed the vault with like 90 or 95 swaps at once, and it threw off the pricing mechanism in the pool contract. So what the attacker was essentially able to withdraw was not recognized by the pool contract, and they were just able to walk away with a ton of money. But it wasn't just like one instance of Balancer that was targeted. It was like 7 chains, multiple different dexes. So this was like $125 million across several instances and chains.
And was that a total wipeout? 125 million? Is that all the assets?
No, I don't think so. I was just looking at DeFi Llama. There's still, at least according to DeFi Llama, $190 million worth of assets on there, and they only targeted like ETH LST stable pools, because like they're obviously non-volatile. So when you're manipulating the math, like every little check down is actually you're just essentially withdrawing a stable coin. You're just repricing one stable coin against another.
The hack is kind of reminiscent of Office Space, the conspiracy they do in Office Space, where they exploit a rounding error, which I think is hilarious, and also echo to the fact that this is one of the oldest protocols in crypto, just like Office Space is an old movie.
I think you and I might be showing our age a little bit by laughing at that reference, Lucas.
I asked Will and Zach before the podcast, and they're both like, "No, I haven't."
You haven't
I need to
seen
watch
Office
it. I need to watch it now.
It's so good.
But I think it's hugely positive for the space that like this hack stands out, given 125 million is definitely substantial, no way, but like we haven't seen something like this in a while. I don't know, Zach, like what do you think about the way that the chains responded? Because I do think it's very interesting that there was a variety of different responses, and there I haven't seen a lot of backlash to like people saying like, oh, this shows this is centralized and is bad. And in fact, it feels like a lot of people have said, actually, like, this is great. Like, we're glad they were able to recover the funds, and it shows the ability to coordinate these decentralized protocols.
Yeah, I mean, there was definitely some people on Twitter kind of complaining, but you get that every time. I mean, I think the response stuff is always a spectrum. Like for some chains, it makes sense to halt the attacker's addresses, freeze it, and then for others, it doesn't make sense. Like ETH has been around for 10 years. They've let people run away with tons of money. Like if they were to kind of halt the chain, I think it would be concerning, but like a Barachain forking to recover people's money, I think is probably the right move. But again, it's a spectrum, and it depends on the team and kind of where the chain is at in its life cycle. So I don't think it's like a one size fits all when it comes to responding to these kind of things.
I mean, I think it's interesting here just because of like where we're headed in terms of AI coding, and like that taking over as being the dominant way in which like code is written and deployed. Like the GitHub CEO, I think, expects 90% of code that's deployed on GitHub is going to be written by AI in the next few years. And so what that means is, like, on the one hand, you can argue, all right, we have code that might be less prone to human error, But on the other hand, I think that also means like you probably have code that might have inherent flaws in it and gets deployed over and over and over again. And so, especially in crypto, where like you can vibe code an app and then deploy it and gain millions to hundreds of millions in assets, like I do think there's going to be a lot of new risk vectors that emerge for exploits. And I think it's going to be interesting to see how the security, the smart contract auditing and security complex kind of evolves in response to this. I was just looking yesterday, like if you look on Ethereum in terms of smart contract deployments, we are now on track to overtake 2020 for the first time, which was kind of the height of DeFi summer. And I think that's just a nod to how much code is being written because of the efficiencies from AI and the possible vulnerabilities that might come down the road.
Yeah, I mean, even beyond like the forward-looking outlook on the impact of AI, also like looking backwards at the existing code. Like now we have a more efficient way to figure out how to exploit it. If there are any bugs in the existing code, which people were speculating was the case with the balancer attack. Something about, I mean, I don't know how it worked like on a step-by-step basis, but people say that sort of like looking at it forensically, that AI might have been used. Like there's no like real conclusive evidence. But it's also like, okay, we already have hundreds of thousands to millions of contracts on chain. Like, are there human created bugs in those things that AI will be able to discover now 5 years later? Like I don't think that's far-fetched at all.
That's like what do they call that for like quantum encryption, like vacuum up the data now and crack it later kind of situation where it's like, maybe the vulnerability exists and it gets found later. That I think you said this at the beginning, but that to me was the most troubling about this, was that the actual vulnerabilities existed for many years and only just discovered. It does make you wonder whether there are other such vulnerabilities that, you kind of think of it like these things are all huge live bug bounties. So like if they're exploitable, surely someone will have found it by now. There's like a very what's that, like the longer something exists, the more likely it is to persist. I forget the name of there's a very Lindy, sorry, I don't know why I'm very Lindy effect to people's comfort with DeFi, but it just shows that you still got to be careful and do risk management. And you shouted out a bit to our own open source DeFi risk management scorecard, which, if people are wondering about how Galaxy assesses risk in these protocols and monitors it, go check that out. Let's move on. Last big story here, Monad. I'm not sure how to pronounce it, but Will wrote a really interesting piece today or last week about how how Monad is finally set to launch in an upcoming mainnet launch, but yet there's been some really interesting market activity in the sort of pre-launch markets for these tokens. You saw it with Plasma, seen it with Monad. What was the story?
Yeah, for sure. I mean, some context. So they gave out this airdrop. So they released these like Monad cards to people on crypto Twitter, which made people eligible for the airdrop. Certain wallets were eligible based on trading activity. So, like Hyperliquid wallets, like even MetaDAO wallets. And then they had kind of this campaign where people opened all these mystery boxes, saw their allocation, and then everyone was like, oh, this is like the most free short ever. Like I'll just short the perp, right? Because Hyperliquid listed high perps, which are essentially these pre-market perps for a token that doesn't exist yet, no external oracle price, and it kind of lets traders like price discover new assets before launch. And so the market was kind of like extremely one-sided, short heavy in an environment with no real circulating supply, no spot price, and thin liquidity. This is kind of the worst case setup for a short squeeze. And then November 4th, I think it was, Bitcoin dips below 100K, entire market's red, and then all of a sudden, like the token perps for Monad wick up 3x. Everyone's short gets liquidated. I saw all these tweets. People like there's that picture that goes around where it's like somebody like shattering their monitor, and it's like, I'm quitting crypto. Like this is the worst thing ever. I just lost everything. But yeah, I mean, we've seen this before, right? Like this happened with Plasma XPL.
There's the chart, the cursed chart, right?
Yeah, it's just, I mean, it's interesting, right? Like this, perhaps there's an argument to be made like Hyperliquid shouldn't list these pre-market perps, but at the same time, it's almost like if you're trading them, you should understand these risks that are involved. But yeah, I mean, curious what you guys think. Like, there
And
was speculation
here's the
on
one. Here's the one you pointed out. This was XPL. Very, very similar, shaped chart as the right. You see that wick higher that just liquidates these people. Is this an inherent risk of perps markets where there is no existing underlying?
I think so. It's kind of good and bad. It allows the market to figure out a price. Just this morning when Coinbase announced the public sale for Monad, the pre-market perp price dipped a bunch. So it's definitely useful for traders. But yeah, I mean, it's clearly not a risk-free airdrop hedge, you know?
Yeah. Yeah, I think that's the takeaway for me is like these instruments are good for helping with price discovery pre-launch, but they're not meant to be hedging instruments given the amount of volume that's on them right now. And so I think the market will get smarter to it over time. And if not, we'll just continue to see this play out over and over again, because I think, that's definitely not organic price action, and somebody is profiting handsomely off of the other side right there.
Yeah, 100%. And also, I remember seeing this tweet back when it happened to Plasma, and there was this fund that was essentially hedging their spot position that wasn't liquid yet. And, they're talking about this should have been a delta neutral strategy. This is absurd. This is market manipulation. Like, this is unbelievable. And everyone in their replies is just like, there's no free lunch, basically. Like, you can't expect there to not be risk in these pre-market, these pre-market perps.
Do you think we even need pre-market perps? I guess. What is the unlock of a pre-market perp? Like, why do we need to trade an asset before it even gets launched?
Yeah, people say the argument is like if you're getting a big airdrop or allocation, then you can hedge it, right? That's sort of, I would say, the core. I think it's different if it's an airdrop. Why would you need to hedge what is otherwise free money, right? But it may not be.
100%.
I guess it may not be free though. Like if you spend a lot of time and effort and, I don't know, God forbid, gas fees to farm to get the airdrop, then you have some cost. But in general, with an airdrop, I feel like you don't. It's mostly free money, right? But a lot of these folks on X have been saying that they paid for allocation, so now they want to hedge their underlying principal investment. They need some way to do it, or they don't. I don't know if they need, but it would make the market healthier for them if there was. Right? Is that
a lot
that's
of the
airdrops
argument people did nothing for, and it was honestly just you have a following on Twitter and you got gifted this Monad card, and you get to claim tokens, which isn't necessarily a bad thing. Like, they want to incentivize user behavior, and people that are rich in crypto maybe are the most likely people to trade meme coins on day one of the chain or something like that.
No, I just mean if you invest though, then you do have an interest in hedging, right? That I would say that's the use case, right, Lucas? Like if you paid for the allocation and now you're waiting and you're worried about the liquid launch price going below your principal investment, then you would want to hedge, right, or lock in some gain or something.
Yeah, but like Will said, like there's no like risk-free hedge, right? And if you're a VC investor, right, like it's not like you invest in VC and then go hedge on like public markets. Like I don't know, maybe they do like short AI baskets.
No, that's a fair point, right? Like you're supposed to be making a longer term investment.
Yes, and one thing that might actually help with this is something that came out over this weekend. Is this one guy went on Twitter and posted that he was going to get like $1 million mega ETH airdrop.
I think this was ICO like, Beast.
Yeah, I mean, I didn't want to call.
I don't know who this is, by the way, but apparently is a very important sort of Ansem like figure in the last sort of cycle on Twitter. I literally only heard about him like a week ago. Wait, so what happened though? Yes, tell the story.
He's getting like $1 million, I think, mega ETH airdrop, and he just basically tweeted was like, "How am I supposed to like hedge this? Like, what am I going to do to protect my exposure?" And like within a day, he just tweeted like, "Well, my allocation just got zeroed out." And so some of these teams are starting to like put in their terms of service, like, "Hey, if you're found to be hedging or selling OTC pre-launch, like we will just remove your allocation." And I think it's tricky to do that in crypto because you can spin up new like it's very hard to track that the same participant is doing this unless they literally go on Twitter and admit it themselves. But I do think it points like we are still have a long way to go in crypto in terms of figuring out optimal distribution mechanisms, how to do these fairly in terms of distribution, but then also how to give that to people who are aligned as long-term investors and not just short-term traders. And we still really haven't seen a good solution, in my opinion.
I mean, I think we're seeing like the early inklings of it. I think like Coinbase just launched the Monad ICO, and they seem to have like parameters on like, oh, like if you dump like if it goes liquid and you dump it too fast, like you'll be penalized. Like I think we're starting to see these ICO platforms and launchpads become a little bit more opinionated on who they're raising money from and how they're kind of doing the distribution, which I think it is probably the way to go. Like I think if you look at TradFi, like it's imperfect, but they try to optimize for the people who are in it for the long run, and aren't just kind of in it for like pumping and dumping. Like there are rules around that on IPOs.
I don't know if it's like good, but I think it's definitely in the launching team's interest. So I maybe it is good. And what is this Coinbase ICO for Monad? Didn't Monad already raise? What had they reserved some allocation for some later public sale? And now it turns out Coinbase will be. And by the way, will that be Coinbase or is that going to be Echo? What is the deal with this situation? Like, and from where are the coins coming? Like, which this must be part of some initial previous like launch tokenomic, like one of those shares of the pie. Monad, like where's Coinbase getting these coins?
I mean, isn't that always like where do any of these tokens come from, Alex?
I mean, it's got to be from the team allocation or some pre-existing community incentivization bucket that Monad's previously disclosed, right?
Well, conveniently, they hadn't released tokenomics prior to this announcement, so they were able to update them. I think,
I see.
So yeah, I think that's where that comes from. I think I was talking to some people at Monad, by the way, right?
Is that what they say? They say it's Monad.
Actually, I haven't even asked them.
I don't know if it's Monad or Monad or Monad.
I think it's just there's a big push across all these projects to get as much distribution of their tokens to as many people as possible. Mega ETH, I think, has really been leading the charge here. They did an NFT. We talked about this previously. They've done a bunch, and I think Monad probably sees an opportunity ahead of this big launch on the 24th, which is a pretty big inflection point for general purpose L1 launches, I would say, given we haven't seen a big one like this in a while. And this one's been hyped for quite a time, and the market environment's a little shaky. So I think, part of it is just trying to increase distribution as much as possible. I do think it's interesting that Coinbase would, for their first launch here, do Monad, which, ostensibly is a direct competitor to Base.
I think it also obviously reflects a change in the U.S. regulatory environment. I guess we'll just have to see how that plays out and who they allow to buy it. I guess I don't know if we saw that, but let's move on to some final thoughts here. And I know Halloween's over, but I am about to scare you guys and the audience. Look at this man, Sam Bankman-Fried. And I only raise this because we are recording on Monday, November 10th. When you see this episode, most likely will be Tuesday, November 11th, the 3-year anniversary of FTX declaring bankruptcy and Sam stepping down as CEO. Later, John Ray would take over the CEO, and Sam, of course, would get sentenced to more than 20 years in jail over this. 3 years since FTX seems like 10 in my opinion, and my gosh, how much has changed? I think we're in a much healthier spot as an industry that Sam is not here. I think the ETF run up from the beginning of 24 and the end of 23 might have saved him and let him paper over the hole from which he looted his clients' money. But my gosh, a lot has changed. Whole market structure. Luke, Zach, you're about to put out our lending report, which has a whole bunch of defunct firms from that era on it. Quick takes on the 3-year anniversary of FTX's collapse, guys.
Oh, no, I mean, I think we've just come a super long way. A lot of it due to self-regulation within the circle of people who survived. I mean, that's like one of the big takeaways that I have in the lending report is, we just made new all-time highs in loans outstanding. But if you look at the composition of this stuff, it's now mostly DeFi, and it's mostly CFIs that rely vast majority, if not entirely, on collateralized lending. And it's not like we had any rules. People come in and step in and say, you guys have to do it this way. The people who survived took it upon themselves, saw what happened. It was like, we need to be better. And we need to figure this thing out. So I think that's like the big takeaway here is we're much more reliant on on-chain infrastructure and on-chain markets, and the off-chain CFIs that survived have done an excellent job of coming together and self-regulating to kind of drag us along.
Yeah, I would just add, I think one thing that is interesting is probably the one thing to emerge from the ashes of the FTX debacle was the Solana revival and Hyperliquid, because a lot of people couldn't trade on FTX, and that created a huge opening for a new perps market to enter. So I think there's been a lot of positives that have come out of this, and I think the industry is in a much better place now.
All right, last couple thoughts. Anybody looking at something in particular this week that they want to mention? I know we've got, well, the government might reopen. My gosh, can you imagine the U.S. government operating? It's not a done deal yet. In fact, I think we're looking at maybe end of the week if it does happen at the earliest. But what are you guys looking at?
Yeah, I'm looking at a few things. Obviously, all this privacy stuff. I would not be surprised to see Hyperliquid list Monero perps, for example. They listed the Zcash perps after the initial run up. So that's definitely something I'm watching. All of this timing with the Monad stuff. So we have the public sale starts on, I believe it is November 17th, and then lasts for 5 days, and then Monad mainnet November 24th. And then this is not announced yet, more so like speculation, but I'm always checking in on meme coin stuff. Kind of been down bad recently on all of this meme coin stuff, just like a lack of activity, people pivoting to, tokens that have some kind of utility instead of just pure speculation. But I've been hearing things about Pump Fund updating their GitHub and introducing this thing called Project Mayhem, which is potentially some kind of fee revenue share option for tokens where developers can redirect fees to other people or automatically distribute fee rewards to token holders. Again, Pump's airdrop has not happened yet, so we're all kind of sitting around waiting to see what happens there. But I wouldn't like count meme coins out already. I'm definitely continuing to watch what happens there.
Yeah, I mean, I'm still looking at a lot of the lending stuff, and yeah, I guess kind of on the heels of maybe Pump Fund speculation. MetaDAO is doing another fundraise late this week. So this will be the first one back in, I think, like 2 or 3 weeks. So we'll see what happens there. But yeah, it's kind of funny that Pump Fund just keeps trying to hammer down how do we return value to holders when you can just give them actual rights through something like ownership rights. But I find it humorous.
I think I'm working on a piece looking at some of the X402 activity. I think there is an interesting revival happening on Base right now, just with people speculating over the airdrop, with the AI agent and X402, where Base is quite a leader, and now with Coinbase going ahead with this new token launchpad. I think there's just a lot of interesting stuff happening under the surface that will bubble up eventually. And then I think XRP ETFs look like they're coming out soon. So interested to see what the flows are like there. The Solana flows, I think, are about 300 million 2 weeks into. So, not insane, but not too shabby. There's some demand there. And then just randomly this morning while scrolling Twitter, it looks like Hyperliquid might be deploying their own lend borrow protocol, which one thing that Zach and I have been talking about a lot is like how much should be enshrined into the base layers of these protocols. And I'm increasingly of the opinion that like everything should be. So I'm kind of excited to see Hyperliquid go ahead with that.
Very interesting. Well, thank you, Lucas, Will, and Zach. Everyone have a great week. And follow Galaxy Research, GLXI Research on X, galaxy.com/research. All right, fellas, we'll see you in the office. And we'll see you out there. Everybody stay safe.